What is the allowance method for uncertain accounts? Well, any business that sells products could run into the scenario where they sell products on credit, thereby receiving an obligation of payment. That is, they are going to receive payment in the future, so they record this as an account receivable. Now, what happens if that account is not paid? Well, the allowance method is a method for dealing with that. So to start with, under this method, the seller would set aside on their books a reserve amount of money based upon a percentage of sales, and you would look at historical data of what percentage of accounts receivable were not paid or were defaulted upon by the obligor. And you would set aside this amount for future sales. Okay, now once again, it should be based upon a prior history of sales, but what this does is once you identify that an account is not going to be paid, that it will be defaulted, then you can match at that point in time the bad debt with the period of sales. Okay, so with that being said, it creates a better understanding for anyone using the financial statements to make decisions, particularly management. So how do you actually go about recording this type of transaction on the financial statements? Well, okay, to start this recording process, what you do is you would actually debit the bad debt expense account. And at the same time, you would credit an allowance for doubtful accounts. Now remember, the allowance for doubtful accounts is a contra account to accounts receivable. Now, once you realize that the debt is not going to be paid, that is, you've identified that there will be a default, you will then debit the allowance for doubtful accounts and you will credit the accounts receivable, so that the matching of principal applies. Now, if at a later point in time, the defaulted individual comes back and actually pays the debt, right? At that point in time, you would reverse the transaction by crediting the allowance for doubtful accounts. You would debit the accounts receivable. Of course, you've received money, so you would debit cash, and then you would credit your accounts receivable, and thus the accounting equation would balance.